following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
Hello, everybody. This is Mark Longo from the Options Insider Radio Network, and I'm breaking into your regularly scheduled programming to let you know about an upcoming event that I think is going to interest quite a few of you. It's called The Future of Options Trading, Finding Edge Outside the Pit, and it's going to be held on November 5th here in Chicago. This is the inaugural conference from the Options Alliance, a new industry trade association that I am privileged to be a part of. And this conference will address the numerous issues facing the fastest growing segment of the options market, namely options entrepreneurs. So who is this event for? Well, if you're a current or former market maker and you're looking for some ways to leverage that unique skill set in some exciting new areas, well, then this event is for you. If you're an aspiring entrepreneur and you're hoping to learn a little bit more about the options market, which is the most dynamic segment of the financial marketplace, but also can be a little bit intimidating, well, then this event is for you. And if you or your firm are looking to expand the reach of your products or services by learning more about the unique needs of options entrepreneurs and new startups and new ventures, then this event is definitely for you. We've got a lot of great speakers lined up covering a wide array of topics, including how to leverage that trading and market making mindset and skill set into other unique opportunities, also overcoming the typical roadblocks and stumbling blocks that may lay in the path of a new option startup or entrepreneur, and of course, perhaps most importantly, how to promote and market that new option startup or new venture that you're planning. Now, I've been to my fair share of options conferences, so I could say with some certainty that there's never been an event quite like this. Take advantage of this unique opportunity to meet with and learn from the entrepreneurs who are out there doing it, building new businesses, starting exciting new ventures in the options market. You can learn more by surfing on over to www.optionsalliance.org and then clicking on the event sign-up tab at the bottom of the page. A lot of people say that their space is limited, but we really do mean it. So if this event interests you, reserve your seat today. Thanks for listening, and now I'll return you to your regularly scheduled program.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. This is, of course, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from the old Options Insider Radio Network. And we got another great show in store for you today. We're joined by the usual cast of characters, plus an extra. We're throwing in a nice little interview block here again today because so many of you guys have requested it. But before we get to that, let me introduce the usual cast of characters joining me on the old program today. Starting off, let's go in order of proximity again. Starting off with the man of many hats, a.k.a. the Viceroy, none other than Mr. Alex Jacobson from Options Express. Alex, welcome back to the show, sir.
Hey, Mark. Good to be back. Actually back in the OX office. Interesting day today. If you took Apple and Microsoft out of the mix today, we could have put our feet up here. Today it was all Apple, all Microsoft. It was kind of a real interesting day, and it's going to be fun to watch what these earnings bring shortly.
Yeah, we got Apple cooking in the after hours. And speaking of cooking, we are also joined by the greasy meatball himself, good old Mark Sebastian from OptionPit.com and Swan Wealth Advisors. Mark, welcome back to the show, sir.
Hey, it's good to be back. Always a pleasure. You know I love it.
And we love having you on. We will be joined in a little bit by good old Uncle Mike Tussauds. You might imagine he is doing some last-minute prep ahead of these Apple earnings, which are imminent. So without further ado, let's dive right on into the trading block.
The trading block.
All right, and welcome to the Trading Block. This is, of course, the portion of the program where we break down the day's worth of action. And as Mr. Alex alluded to at OX and pretty much across the street, it was a tale of two former Silicon Valley titans, one of them still very much so, one of them becoming one yet again, perhaps in a different form, Apple and Microsoft. But before we get into that, well, actually, not much really to get into in the rest of the broad indices. Most of the major indices essentially unched on the day. Vol coming back a little bit, maybe a little bit, that being coming... Blah. Vol coming back a little bit, maybe some of that coming from the weekend, some of that coming from the buildup of anticipation into the raft of earnings we have for the rest of the week. But we are holding our breath right now as it is almost time for Apple earnings announcement after the close here. Apple closing today, $529.38, up about 3.5 cents on the day. I'm sorry, up about $3.50 on the day. And looking here, let's start it off as we are wont to do going into earnings, looking at this weekly straddle here, going out about exactly $31 right here. So it's got some room to run. Senior Sebastian, let's start with you. What, going into today's trading, I'm sure a lot of the Option Pit mentees and clients were looking at this one. Perhaps maybe you guys over there at Swan as well. What's your take? Cheap, pricey? Were they putting on some long primo? What were they doing here? Were they wiping out?
It was really, if you looked at the curve, it was really interesting. The volatility curve actually looked like a short iron butterfly, where you actually had the straddle completely bid up, and then the wings looked like they were absolutely dumped on, and then at the very end you saw the kind of the tails coming up. It was a really interesting structure, and I was surmising that there are a lot of people trading that straddle back and forth that think it's pretty fairly priced, and then they were basically buying that and dumping the wings. So it looks like kind of the general market position is that is long the meat, short the wings.
That's interesting, and that probably dovetails with a lot of what we see, too. Of course, the Iron Condor being the trade du jour these days, a lot of newsletter and services pushing that. Apple being the underlying du jour. Not surprising to hear that vol curve maybe shaping up like there's a lot of Iron Condors, a lot of Iron Flies.
Yeah, well, it's shaping up like they're long the straddle and short the wings. So it's actually more like an at-the-money Iron Butterfly, or at-the-money short fly, where... you've got where most people are used to a fly where they're collecting premium. Well, the alternative is if you think the straddle is relatively fairly priced, you can dump the wings and turn that trade into something that can pay pretty well if the if the underlying moves somewhere close to the straddle price. So that's kind of what we were seeing, and maybe also some put sellers trying to get in, or some calls writers looking to do covered calls. But just a really odd curve that the 530s were more expensive than the 550s and the 510s.
Now, if you had mentioned to me something like they were selling the straddle, buying the wings, that would probably be more in line with what I would have guesstimated traditionally going into an Apple earnings event. I mean, exactly. How many times have we said on this show that those wings are just bid up out of control on a regular basis, and people are writing the money because it's so juicy? Seems like that tail has reversed a little bit, which is kind of interesting.
They don't believe in the hopium anymore, apparently. They only believe that they believe in the regular move. The guy I feel bad for, the funny thing is, as cheap as those wings are, the guy who goes out and say, I think Apple's going to go to is going higher, that buys the 560 calls, is going to be absolutely obliterated tomorrow.
Well, I'm looking here. We had weekly paper, 8,000 of the 620s trading today, weeklies. So there still are the zealots out there en masse.
$1 in the dream, baby.
Hey, Alex, does that kind of dovetail with what you saw over there at OX, too? A lot of people actually right in the wings in Apple for a change?
Yeah, as a matter of fact, I taught a class this morning. I was in Schaumburg teaching a class of 80 very, very active investors, and my agenda was 30 minutes of showcasing OX tools, and my life turned into 2 hours of ciphering ratio spreads up for Apple. And it was funny because, you teach for 30 minutes, and this was an optionetics crowd, so they're highly motivated and high net worth. But I had an agenda, finished it, and I said, any questions? No. Walked out of the room, and it was like there was a bug infestation. There was a mass exodus of people who just wanted to talk Apple in the corridor, and everything was, can I do this 1 by 2? Can I do this 2 by 3? So clearly this was a group that was well educated and has the ethic to kind of start ciphering ratios. But it was all Apple. It was all the time. And they were looking the way very similar to what Mark identified, because they had tools I didn't have. I didn't have a computer out there, and they had tools, and they were showcasing this file's bad, this file's wrong. No file is bad or wrong. It's just a case of, what's going on in the marketplace. But they were essentially looking to be able to get direction without risking a lot of money if they were wrong, and that's ratios, and that's kind of what we're playing with this morning.
So it's all because of your webinar today. We're seeing this vol skew here in Apple. It's all you, Alex.
Alex Jacobson, quote, dump the wings in Apple. They're overpriced.
Speaking of all Apple all the time, we are now joined by good old Uncle Mike Tusaw from the hinterlands, a.k.a. scenic St. Charles, Illinois. Uncle Mike, I'm sure a lot going on today as you're prepping for the big announcement. What's your take on the lead-up and the event itself when it is imminent? Any minute now we should see this number coming up.
Why? What's going on today?
It's your minion's birthday. Did you forget? You didn't get a present?
Ah, crap! I forgot.
Mike.
I tell you. Now, with Apple, looking at it going into it, one thing that I was noticing on Friday is that just the difference between, now let me bring it up right now, but I was noticing on Friday the difference between the front week 5-10 put and then a 5-10 put like 2 or 3 weeks out was very minimal, and so I have to admit that I was slightly tempted of doing somewhat of a spec play on it, but I did resist the urge and the temptation. But for now, we're just long the 460 put on it. We're just long stock, long 460 put. Not going to mess with anything. Going to wait till tomorrow before we go on to our finance style plays of trying to finance the long put. I'm staying out of it and just living off the long put for today anyway.
Long stock, long put. If I had a snooze button, I would be hitting it right now. You're killing me. I expected some sort of funky, fun ratio, time spread, something fun that our listeners could sink their teeth into. Long stock, long put. You're killing me.
I know. I disappoint myself often when I do such things, but I just didn't have anything that I felt I should do for this specific earnings announcement. I normally aim to please with such things, and nothing there for me right now.
Next time we have a show on Apple earnings, do me a favor, just put on a one lot of something so we can dive into it in depth. I did a one lot of these 5-10 1/3 ratio put spread, and it's working out pretty good so far.
I can lie and make up something if you want. I mean,
we don't need to mention the size. Let's talk about the trade itself and the thought process behind it. So there you go, listeners. Uncle Mike taking the extremely risky long stock, long put approach to Apple earnings. Actually, I'm giving you a hard time, but that is your kind of MO. You don't tend to play around earnings. You may play into and up to earnings, then you kind of scale back and let the crazies dive in around the event itself.
Well, I will tell you, this is what I had on last week. I did have a 5-10 calendar going on last week. I did the November week 4 5-10 put, and then the November week 1. I'm sorry, the October October week 4 5-10 put, and that one actually worked out really well because there was a lot of vol, or at least I felt there was a lot of vol about 8 or 9 days ago when I actually put on that trade. And I exited the trade on Thursday, and I was looking to do something similar to that on Friday, but nothing was there for me.
You know, how many times have we said on this show in the past, I think Andrew is a particular proponent of this strategy, but I think we've all used it to varying degrees, and that is putting on some long primo in the weeks leading up to an announcement like this, taking advantage of the fact that you have little or no decay, you get some free gamma for a couple of weeks, you get a few free scalps, maybe you get a movement or two in your back pocket, and then you take it off before earnings. And it seems like this cycle anyway, the narrative has been, you can do all right doing that, but if you hold it through earnings, which is something we usually don't do, that's where the real movements are happening, like we're seeing Microsoft and a bunch of others really delivering. I wonder if that narrative will continue for Apple. It'll be the case where if you held your powder and closed it out into the announcement, maybe you did all right, but if you held it through the announcement, you do orders of magnitude better. We'll have to wait and see. Fortunately, that number is still imminent, and now we're going to keep on rolling because we have to get to it. It is time, because so many of you have asked for us yet again for another interview. We're going to bring you one right now. It's time for the interview block.
The interview block.
All right, everybody. Those rapturous applause means it is time once again for the interview block. A lot of you guys have written in saying, hey, we want more guests. It would be great if you could have more guests. So we are obliging you yet again today. And today's guest is Mark Greenstein. He is the managing principal over there at Orchard Grove Asset Management. Mark, welcome to the program.
Thank you very much. Good afternoon.
And Mark, go ahead and give our listeners a little bit of your background in the options and derivative space and how you found your way to being a CTA over there at Orchard Grove.
Sure. I've been a portfolio manager and a trader going on 15 years. This is actually my second career. I started a life as an engineer and realized that was way too boring. I started Orchard Grove Asset Management about 3 years with my partner, Jed Brody. So between us, almost 35 years of experience trading futures and options and derivatives. So we're old guys under a somewhat new roof here, and we've both been portfolio managers at larger asset managers and just decided that it was time to lessen the commute, open a shop close to home, and bring what we do to a smaller class of investors than we traditionally have served. We've generally served very large institutions, and now we serve a much broader client base. Still very much have institutions as our clients, but we have a lot of high net worth and retail folks as well. So much broader customer base, which makes it a lot more fun.
Well, Mark, Mike Tusa here from RCM. I just wanted to ask you a little bit in terms of, you had mentioned that you have kind of a broad client base, but tell us maybe about some of the markets that you trade. Are you focused on equities? Do you do the grains? Do you do bonds? Tell us a little bit about that.
We're a registered CTA, so that's a commodity trading advisor. So we're registered. We trade exclusively futures and products that are traded on futures exchanges around the world. We trade 25 different markets right now, everything from grains to metals to meats to cocoa and sugar, including S&P 500, bonds, currencies, you name it, we trade it. Foreign markets that we trade as well would include the Nikkei, which has been a wonderful market the last year. And we also trade the Bunds, which is the 10-year bond coming out of Germany, another great deep liquid market.
Okay. Now with that, what's your typical time frame with which you're in and out of a trade?
We cover the shorter end of the spectrum. So we are typically in an investment from 1 to 3 trading days, so say 24 to 72 market hours. And that covers almost all of the markets we trade. So if we're in a market for any longer than that, it's probably just a slower moving market, maybe a market like sugar. But what we find is most of our investors use us to complement their own strategies, which tend to be longer in duration. So we add a lot of non-correlation to their portfolio. We help balance it out by covering the short end of the spectrum.
Yeah, and that's interesting because a lot of our listeners are option traders. Obviously, the Options Insider, the Option Block, you probably figured as much. So with that, you would kind of look to a lot of your clients that you have in the CTA look to the futures as kind of an alternative to just being a long-only equity portfolio or an option trading portfolio, something different.
Exactly, and I would say not so much an alternative as much as a complement. Because on a portfolio basis, adding a program like ours, you can really smooth out your return. Believe it or not, and this is something we learned once we got going, a good number of our smaller clients are options, are heavily invested in options. A lot of them on the short options side. It's been a great couple of years, actually, for short options traders, as volatility has been relatively low, and every time it's spiked up, it's given short option players a chance to sell it and grab some nice premium on the way down. But what's happened is by adding a program like ours to their portfolio and doing both, they've actually normalized the returns out. And also, we trade a lot of products that typically option traders don't get involved in, so perhaps the meats or the grains or even things like sugar and cocoa, and that's another diversifier for their portfolios.
Now, Mark, you said something that really interests me about the non-correlated assets that you trade on a regular basis. And one of the common refrains, the common complaints we're hearing from hedge fund managers, CTAs, asset managers, just across the board in general these days, is that is becoming an increasingly difficult road to hoe. Correlation is just growing across asset classes. Assets that used to be pretty dependably, if not inversely correlated, at least having a strong negative correlation, are starting to move together or in lockstep in some scenarios. And it's becoming a big problem for a lot of people who are looking to use traditional means of diversification across a variety of asset classes. So for someone like you, who specializes in non-correlated assets, how difficult of a problem has this been for you to overcome? How are you having a harder time finding asset classes to include in your mix? In general, how is this impacting your strategies on a day-to-day basis?
Well, it's a good point, and I would say it's not easy to achieve it. I'd encourage anyone who's really interested in this particular topic, we can send them some materials. We have actually maintained a pretty much market-leading position in this area. Our correlations are 0.01 to 0.05 to just about anything else out there, and we've consistently been able to do that and realize that by doing a couple of things. First of all, by keeping the basket we invest in incredibly diverse. Right, that helps, and knowing where the correlations lie within that basket. So we know that gold and silver are going to pretty much be well correlated, and so we make sure we don't double down on investments in both of those markets at the same time. Secondly, we track a little bit more esoteric correlations every day, just to make sure we don't get blindsided. Things like, for example, the correlation between the dollar and gold, right, which tends to be inversely correlated. We make sure that we take that into account when we make investments as well. And then finally, we get this non-correlation by just being shorter term. The shorter the time frame you are in something, the less chance there is for it to be correlated with anything else in the portfolio. So by doing those three things pretty regularly and quite religiously, we've been able to achieve really in our space what's considered industry-leading non-correlation.
I suppose it's actually...
Hey, Mark.
Oh, go ahead, Alex.
Just sort of a question. I'm reading the synopsis here. You talk about the fact that you're rules-based. Without giving away the store, can you talk a little bit about what kind of rules you use to identify and define trades?
Sure. My partner and I are disciples of a way of looking at markets called swing trading, right? Which is basically we're looking to capture a 1 to 3 day type of swing out of the market. That can come verse three ways, and we look at each of those three ways and have characterized a set of rules that we have programmed up into our computers to go searching for when these patterns occur in the market. The three different ways are: one is what we would call retracements within an existing trend. So a market is rocking and rolling in one direction, whether it's long or short, we don't care. We're going to look to buy some pullback in that trend and try to grab a piece when it resumes the trend that it started out with that caused it to get your attention. The second would be counter trend trading, right? Market rallies up. A good example would be gold today. It got up into the mid-60s area and is probably due for a pullback. That's a good example of a market that can take a look at and take a short-term counter trend trade on. It's reached some exhaustion point. And so we have models that look for certain things in the markets, all technical based. We don't use fundamentals. It's just basically price and volume that we look at. And then and a bunch of math behind it. And then the third would be breakout type of situation where a market has just been going sideways, 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 and then finally just breaks out in one direction or another. A great example of that today, and a very nice trade for us, would be corn to the short side. It's been going quite sideways. Today it broke down to the short side. It pretty much closed on its lows, and that was an excellent trade for us. So we trade all three of those styles on this big basket of markets. Again, it doesn't lock us into pretty much anything, right? Long-short programs might be long or short any of those markets for an extended period of time, but you can see if somebody's been long corn or long beans, how we could then, with this short-term trade that we just took today, complement and help them balance out their portfolio.
Mark, if you're in a trade and it goes the way you want, what do you use to define an exit point? And if it doesn't go the way you want, what do you use to manage risk?
So every trade, once we're in a trade, every trade has both a profit stop and a loss stop in the market at all times. So we put those in as what's called an OCO, one cancels other. So no matter what happens, whether the trade works or not, we're in the market looking to exit the trade, again, for either profit or to take a loss. We never make the loss worse, so it can only get better, so to speak, or lessen risk. And so the longer we're in a trade, our models tend to adjust to lessen the risk and or grab the profit and take the trade off. What we typically use for defining what those points are, it's all proprietary models, but a key component of that, I can tell you, is the typical volatility and range of a market. So we take a look at how a market typically behaves, and we're not looking in our program for the outsized move. This is a program of probabilities. And so we're saying, okay, corn went short today. It's a breakout model. It typically does 7 or 8 cents a day. We're going to, if it goes 14, 15 cents against us, that's a pretty far distance to suggest that it's likely to continue on the downside here. So we're going to stop out of that trade. By the same token, if we get 7, 8, 9, 10 cents in our favor, that's a really nice target for a market like corn on a 1 to 3 day basis, and the model's going to grab the profit. So we're about hitting a lot of singles, doubles, triples, and then every now and then we wake up and get a home run.
Now, Mark, it sounds like you're focused very much, like you said, on the short duration type trades and on the non-correlated assets. So when you're focusing on these very, very short-term trades, like you just mentioned, corn to the downside, it sounds like you're utilizing futures 90% of the time. But are there some scenarios where instead you might go for, let's say, if you're looking bearish on corn, for example, maybe a very near-term put spread, or perhaps using options in the money or otherwise as a way to get some additional deltas with your futures? Or what are some use cases where you guys use options over there at your firm?
Well, believe it or not, we typically don't use futures options here at the firm. We have always gone outright into the futures, and that's generally because our mandate is a 24 to 72 hour period, and it's very hard using because of the built-in volatility of an option to get an assurance of profit in that period of time. Things can happen and the vol can shift. You need both price and volatility to move in your favor to maximize the value there. So we've always done outrights. Since people have asked us this before about options, we've gone back to our client base, and believe it or not, they've encouraged us to stick with purely futures because a lot of our clients, as I mentioned earlier, are existing options traders or have options already in their program. So they're looking for us as a complement to that. And in some sense, our future and their option creates some kind of spread for them.
Yeah, I guess they don't want you doubling down on their efforts or vice versa. It makes sense to have you be the non-correlated futures guy.
Exactly. That's exactly correct.
And since we do have a futures guy, quote unquote, a commodity guy on the show, we don't have one on very often, I'd be remiss if I didn't pick your brain about a few markets. Obviously, you're very, very focused on the near term, so maybe you don't look at some of the longer term trends. But you mentioned taking a near term spec on the grains right now. I'm sorry. You mentioned taking a near-term spec on corn recently. What are some other markets you're seeing right now, and what are some potential trends, some potential trades you're seeing shape up in, let's say, gold, or we mentioned the rates before, or perhaps the currencies? What's catching your eye right now?
Well, I think it's important that everybody remember that the bigger trends right now in gold and, say, the 30-year bonds or even the 10-year bonds is down. And so we've got wonderful corrections now, retracements in these bigger downtrends that I think are getting very, very ripe. And I think there's a real catalyst coming up this Wednesday with the FOMC meeting that might surprise folks. And personally, if you share the view that these markets are in longer-term downtrends, you might find this week a very, very choice spot to take on some short bias positions in those markets. That would be my view on both rates and gold. I think you'll find another market that's very interesting, a little contrarian. A lot of our stuff sometimes gives signals on a contrarian basis. Is the dollar itself. The currency complex, especially the euro and the dollar. Very important to note that the euro currency is at all-time lows in volatility since the inception of the product itself or the currency itself in 1999. So there's an old friend of mine who's been in this business for 30 years, and he's always said volatility contraction leads to volatility expansion. So these are markets, certainly if you're an options trader, I would not be short volatility in the currencies right now because they're very, very compressed and due for a larger move. And the contrarian me suggests that I don't think the euro is going to be able to sustain itself at these levels. I don't think Europe wants it at these levels. They can't afford it. Germany's a net exporter of cars and all sorts of machinery, and they do not want a strong euro. So I think there's going to be a lot of pressure on the ECB to knock the euro down a bit, and that's going to be positive for the dollar. Dollar goes up, that's also going to be a big negative for gold as well as copper. I think copper's got a real chance of a downside move coming.
If only there were a product out there where someone could trade the actual vol of the euro. Oh, wait, there is, but that's a conversation for another day and another show entirely. But, Mark, we want to thank you for taking a few minutes to join us on the program here. This is kind of just a brief taste, listeners. If you want to hear not too many Marks. If you want to hear more about what Mark is talking about in a variety of different markets, then tune in to the old RCM webinar train this Wednesday, not Thursday because of Halloween, but Wednesday. Tune in over there at RCM for their webinar train. We'll have a registration link in our show notes. Of course, you can find it over there at the RCM website as well. And Mark, before we go, why don't you give our listeners a little bit of a tease? Any other appearances, any other things they may want to check out? They want to learn more about Orchard Grove Asset Management or what you have going on.
Well, sure. I think Wednesday is going to be a great time. We can get into overview of the program, answer any direct questions, and then they can reach out to us directly. We're at 1-888-44 Grove. Give us a call. We'll be happy to tell you more and tell you a little bit about what we do and how it might be able to be of help to your own investing and portfolio.
Great, and thanks again, Mark, for joining us. We'll definitely have to bring you back on again down the road to explore some of these short-term trends and a variety of these different commodity products in a little bit more detail.
Super, be my pleasure.
Great, thank you.
Thanks, Mark.
All right, thanks, gentlemen.
All right, so that was pretty easy, right, Mark?
That was great.
So what we'll do is this will all be recorded. It will go out tomorrow morning. It'll go out on our website through our radio network, which is out through a variety of outlets, iTunes, Stitcher, all the places that online audio is provided. And what we'll do is we'll send you a link. We can also provide you with an embed code if you like for your website, so you can embed that episode right up there for all of your customers and clients and future clients to see, and wherever else you'd like to go for it. And then good luck on Wednesday. Thanks for joining us.
All right. Thank you, gentlemen. Have a great rest of the day.
Great. You too. All right. That is going to do it for the interview block. And now we're going to keep on rolling right on into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, listeners, welcome to the Xpress Block. This is the portion of the program where I hand the reins over to the Viceroy, and he takes us on an in-depth, behind-the-scenes tour of what's going on over there at OX. But before we do that, let me just break into Alex's segment for a second to let you know that the Apple earnings are indeed out. Actually, looks like they were off pretty aggressively, down about 20-odd handles. They seem to have bounced back relatively nicely now, only down about 10 handles or so. In the after hours, we'll pay attention to that throughout the rest of the show, see how that updates. In honor of the Apple earnings, let's do a really quick trading patterns guessing game because it is so fun. And this is going to be a pretty easy one, so you guys just don't have to put on your thinking caps too hard for this one. Alex, you can even play along as well if you're not logged into the OX system and not cheating from behind the scenes. We'll see. But what we'll do is
not logged in.
Oh, well, there you go. You can play along as well. We're going to do an all-Apple themed trading patterns guessing game today. And so we'll kick it off. I think we'll kick it off with you, Uncle Mike. We'll let you, because you are the diehard Apple devotee here amongst us. What would you say is the number one asset, number one underlying that OX customers are trading after they're trading, or perhaps in conjunction with trading Apple?
This is tough. I'll say Google.
Not a bad guess. Number five
Okay.
on the list. So Uncle Mike just hit number 5. Alex, we'll mix it up. You don't have a chance to do this very often. We'll let you go next. What is your guess for the number one highly correlated asset over there at OX?
I'm going to do the low-hanging fruit guess, the spider.
Actually, no. Surprisingly not. There's the E-mini D's Future. The E-mini, but I don't see the Spider on here, surprisingly. I guess everyone's swapping the E-mini in for the Spider today. Kind of half a dozen one, 6 the other, but still. So maybe you get half a point for that one, Alex. How about that? And that would be number 3. I can't believe you guys aren't hitting the low-hanging fruit. Sebastian, I know you got one of these in you. What's the number one Apple correlated underlying?
Facebook.
There you go. See, I gave it to you on a silver platter when I said heavy, crazy retail.
Yeah, there you go.
Continue that logic. What's another crazy one?
Here's the thing. It's a hard way of trusting. You ever see that scene in The Princess Bride where the villain's trying to take on the smart guy, and he ends up making himself immune to the poison. He ends up killing him. That's how I think whenever I deal with you, Mark, because of all of your Apple torture to me.
You've been burned too many times.
Yes. So when you said retail, I had to think, does he really mean retail? But then again, he might know that that's what I'm thinking, so should I really think that way? But that's what went through my head. It was that scene of the movie the whole time.
He could have switched the poison or put it in front of me. All right, keep on with Sebastian's twisted retail logic. What's another name that fits into that? Tusaw, we'll go with you.
That fits into the Apple top 5?
Yeah.
All right, I will go. Let's see. We already got Facebook, the E-mini, and Google out of the way. I'll say Amazon.
A good guess. Surprisingly, no, not today at least. For Amazon, not in the top 10. I know, I'm surprised by that too. Mr. Alex, what's your guess? Another crazy retail heavy name and an OX heavy name as well.
Microsoft.
Yeah, you would have thought with today, but no, not even on there. So that's surprising me as well. So interesting stuff. Even more heavy retail. Go crazy. Go down the retail well, Sebastian. I know you can do this.
GLD.
No. You guys are missing some crazy low-hanging fruit. No. Think Apple territory, and what else Apple traders love to trade.
BlackBerry.
QQQ.
Yeah,
Tesla.
There you go. I'm thinking crazy, retail-heavy, outlandish, upside skew, bid to the moon, except for today and Apple type names.
Gotcha.
So you hit Facebook, number 1, Tesla, number 2, E-mini, number 3, surprisingly. Number 4, let's just say this name has had a rocky history. Some people may think it might be bad, dangerous to your husbands and or wives. Had its legs cut out from under itself pretty aggressively.
The Widowmaker?
Yes. Number 4, Netflix. Yes. Alex already gave us number 5, Google. Then the rest get kind of crazier from there. Actually, one more you might be able to guess. Let's say
LinkedIn?
This is literally a retail heavy name as well as retail trading friendly. There you go. JCPenney, number 7. Number 6, Voxajet. I'm not sure what that VJET.
It's an IPO. It was IPO'd a couple of days ago.
Oh, okay.
Big on our boards here.
There you go.
Speaking of JCPenney, what does everybody think? Do they make it through Christmas?
No. Oh God, no. They're toast.
I am still impressed that, or maybe shocked that this guy would leave the Apple gig where he is so lauded and dive into a beast like JCPenney and just get taken to the cleaners. No one can save that beast.
He did a bad job. Well, no, he ruined the company.
Yeah, he didn't. So maybe the magic at Apple essentially wasn't him. It was just the product and everything else, and he kind of just got the gloss, the sheen from it. And everyone thought it was him and his retail genius when perhaps it was not. Either way, JCPenney, a bit of a wasteland. But that was interesting stuff. Number 8, Vision China. Number 9, Baidu, a popular OX name. And number 10, Yahoo. There you go. An all Apple Xpress Block. Mr. Alex, anything you'd like to add for your behind-the-scenes tour here into OX territory?
Nope. As I say, today was actually fairly quiet except for Apple and Microsoft. And pretty uneventful day. Everybody sat here waiting for Apple, and now we have Apple. I think the next stop this week will be the FMOC notes on Wednesday. I think folks will be looking at that. But other than that, a fairly wait and see for Apple day and quiet otherwise.
And your trend at OX pretty much dovetail what we're seeing in the marketplace, people essentially buying the guts and selling the wings.
Yeah, today I'm telling you, I never had so many questions relating to, find me a ratio where I don't lose money if I'm wrong and the move is big. It was like option educator's heaven today. I just wish I had better tools.
There you go. Option educators heaven for Mr. Alex. Well, that's going to do it for the old Xpress Block. And because we've been talking for quite a while, and it's Apple night, we're going to dive right on into Around the Block.
Around the Block.
All right, and this brings us, of course, to our final segment, Around the Block. No odd block today because we did have the interview block, but that'll be coming back later this week. And now let's look in here, check back in one final time for the show here on Apple earnings, and it seems to be gaining a little bit of steam here in the after hours, down only about, actually a little bit worse actually now that I look at it again. So it was down about 10 or so handles. Now it's down about 15 or so in the after hours. So seems to be vacillating from between down 20 and down 15. Between down 20 and about down 10. So perhaps we'll open up somewhere in this range. Uncle Mike Tusaw, what's your take? If we open up somewhere around these levels, what's your first move there tomorrow for good old Apple? Just keep that put? You're going to roll it? What's the plan?
Well, I think what I'm going to do is, if we're at this level tomorrow, I'll probably wait till the second hour of the trading day, and maybe I'll miss some of the initial upside vol that exists, but I'm still going to wait a little bit. But right now, my gut reaction is I'll probably sell a front week 500 put and then buy perhaps maybe a 2 or 3 week 490 put. That's the initial reaction of what I'm thinking right now, but obviously we'll see what the numbers say tomorrow morning.
And that is in addition to the protective put you're going to leave in place? You're not going to roll that guy or do anything with that?
No, I think I'm real happy to be where we're at right now. I like being between 80 and 90% of the entire asset protected. And I think that I don't know if I want to sell a vertical credit spread on this right now. Once again, that may change tomorrow morning. We'll see what the option prices are. But initially, what I'm thinking is some type of a diagonal spread where we can get positive theta and positive vega initially.
And it looks like here, Mr. Sebastian, if things hold the course and we open around here tomorrow, all those premium buyers out there in Apple may have been a little too optimistic unless they sold those wings on some crazy ratio.
The wings. I mean, that's probably why it was built that way. And, it's funny. I just see them going, boo-hoo, boo-hoo. Sorry, fanboys. You lose.
Apparently the fanboys not out there in mass because they're having the temerity to sell the wings, and I'm trying to think the last time I saw that in Apple. It's been quite a long time.
I agree.
This was the most traditional leg into great verticals all day long on the upside into earnings that you could pretty much rely on. That's kind of gone the way of the dodo, it seems like, recently, and looks like these people were not exactly rewarded for their optimism yet again. Interesting stuff. What else are you watching for the rest of this week? Obviously a ton of other earnings announcements on the horizon. Any catching your eye in particular, Senor Sebastian?
I think it's going to be all FOMC driving the market. The data doesn't seem to matter. The only thing that matters is, are we getting QE into March? If they don't outrightly say we're getting QE until into the first quarter of 14, I think you'll see something else. That's what could drive us. Otherwise, I think everybody's just looking for the old status quo.
I know your partner in crime, Mr. Giovinazzi, is big in the gaming sector. Of course, Zynga had their deal, but there's more coming out tomorrow. We got EA and Take-Two both announcing tomorrow on the 29th. 29th also has Nokia, now a future division of Microsoft. So that one perhaps not as exciting as it may have once been. And then we also, the following day, everyone talking about Ford a lot these days. Everyone talking about Ford. GM coming out on the 30th. And we don't get into the hoteliers very often, but Marriott also on the 30th as well. So it's a lot of names to keep playing. I'm sure a lot of names will be I'll be curious on Thursday's show to check back and see what the clientele over there at OX is really lighting up the tape with. Sounds like they're all Microsoft and Apple. I'm hoping, or I'm not hoping, but I'm assuming the Apple's gonna somewhat trend down a little bit towards the rest of this week, and we'll see what else maybe takes its place. Alex, what are you watching for the rest of this week, sir?
FOMC notes on Wednesday, and the 10-year again. The interesting thing is, and I'm going to start sounding like kind of a broken record, but worried about the 10-year when it got up in the 3 area, and now it's back down in the 2.5 area again. I like the rate, but I'm worried that we start to see 2.4, 2.3. That's clearly capitulation to the economy slowing, and we can blame some of that on Washington, but that will become troublesome. I think GM's earnings will also be a telltale sign. Both Ford and GM's earnings will be a telltale sign. But we're going to start watching, retail numbers too shortly. And Mark and I both think that JCPenney is probably dead. But retail has been a little disappointing lately. So looking at a lot of stuff, but back to watching macro, what's going on in the economy, what's going on in the 10-year. I'm going to get nervous if that 10-year drops below 240.
Of course, speaking of retail-heavy names and what's going to be trading the rest of this week, I somehow neglected Facebook, the other side of that coin. They are announcing on the 30th. So if I had to guess what the OX people are going to be switching off to later this week, I'm guessing Facebook's going to be lighting up a lot of that chart for the rest of this week. Of course, we'll find out more on our second show. But unfortunately, that's all the time we have for this episode of the Option Block. But before we go, let me check in with each of my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods. Starting off with you, Mr. Sebastian, what is cooking in the land of Option Pit and or Swan?
Well, we've got our on our events page, we now have listed the event that you and I will be hosting, Option Pit and Options Insider, on December 7th. So I expect to see some emails about that, but a 4-hour class for $138, and it includes the recordings of the Options Insider Unusual Activities Forum for free if you purchase before November 21st. How does it get any better than that, Mark? The answer, it doesn't.
That's a pretty good deal. If I wasn't involved, I would have to buy that myself. And what Mark said is true. A lot of you guys have been bugging us. We did that Unusual Activity Forum, the first of its kind ever. We did it live here in Chicago back in May, and people have been bugging us ever since. Can we get the audio recordings as well as the video recordings and the presentations from that event? We've never released them. We've toyed with what to do with them, and a lot of people want to get their hands on those. We've toyed with selling those individually. They can go for quite a bit. But we decided, no, what better way than to reward the true listeners of this show and the true readers of the website than to give them those for free when they come in and they continue their education by signing up for this additional Options Insider Education series that we're doing with our friends over there at Option Pit. So we'll let you know more details about that. But if you're curious about that 4-hour options educational extravaganza and you want to know all about the unusual activity stuff that we dove into back in May, this is your chance to get both of those. You're going to surf on over to optionpit.com/events for that one. We'll have a link up on the Options Insider very shortly, but check it out over there at optionpit.com/events, and you could register for it there. And Mr. Tusaw, I'm thinking I know what's coming up in the land of the RCM webinar train, but why don't you go ahead and enlighten me anyway?
Got it. Well, Mark's going to come on board, who is our guest today, and speak on this from the CTA world this Wednesday night instead of Thursday night. Got the trick-or-treaters that we got to take care of on Thursday night, and so by all means, we need to make sure that our young kids have plenty of candy. And then the other thing that I want to mention, next week, also on a Wednesday for scheduling purposes, we have been trying to get this person on for a long time, Greg Olson from the Horton Group, and he is going to do a webinar that it's not exactly on options. Well, it actually has nothing to do with options, but it's on something that has a lot to do with your finance. We wanted to find the biggest expert we could possibly find on Obamacare, and we think we found them. So next Wednesday night, we're going to do a webinar on Obamacare. We are expecting a very big crowd for it. So as soon as we get that information out there, make sure you sign up right away because seating will be limited.
I'm flattered, Mike. I didn't know you were aware of my cutting-edge research into Obamacare.
Well, you know.
Well regarded on that subject, sir. Just in case you're wondering.
That makes one of us that actually knows something about it.
All right, and last but certainly not least, Mr. Viceroy, what is cooking in the land of OX education?
So, first of all, I'm going to do something unusual. I'm going to give a shout-out to a listener, and this was a listener I met in Seattle a week back at the wedding I was at, who was from Portland, Oregon, and it was actually a joy sitting there in Seattle going, what do you do, what do you do? And then it was like I listened to the Option Insider. So a shout out to Brett Norris from Portland, Oregon. Brett, it was a joy to meet you. And now you can play this back for your family. Back to business, 3 things. Wednesday, Russell Rhodes from the SIBO is going to come over and talk about weeklies. And while I'm on the topic of weeklies, we ran a study over here. In fact, our former head of education who ran a simulation here, and he ran selling 1 standard deviation out of the money strangles on the SPX before he left the firm. He did it on a weekly basis. He did it on a monthly basis for the last 12 months. And a very curious result, which I'll expand upon when we have more time. But if you ask yourself which one performed better and transaction costs and friction were left out of the equation, the monthlies outperform the weeklies. So we'll talk about that when we have some more time. But as I say, October 30th, Russell Rhodes from the SIBO doing a webinar on weeklies. October 31st, we're going to do Walk Limit, which has become a very popular product and is still an industry exclusive here at Options Express. $150 Amazon gift card with an account funded with $1,000 and 10 trades, and that's what's going on.
And you're going to check for me that radio hosts with existing accounts if they're excluded from that offer or not, right? Because
no, I'm going to break into the drawer to keep them and steal one.
I'm thinking I can put a lot of money through that offer and do all right for my holiday shopping. Not a bad plan. And
the only way I'm going to get one is to jimmy that drawer.
Staring you in the face and mocking you, Alex. But we do love, of course, giving shout-outs to our listeners as well. You, too, if you meet the Viceroy at an event across the country, you, too, can be profiled. Of course, you can also get your name on the show the old-fashioned way. Send us a great question or comment. You can do that a lot of great ways. You can, of course, leave us a comment on the show notes on theoptionsinsider.com, or you can find us on Twitter, twitter.com/options, or on Facebook, facebook.com/theoptions. Options Insider, or hey, do it the old-fashioned way, questions@theoptionsinsider.com. And some of you have even asked if you're going to bring back the old-fashioned way. We used to have a voicemail line. Maybe we will bring that back. We're actually toying with some interesting ideas on the network for doing stuff just like that. So stay tuned for that. But unfortunately, you won't be able to stay tuned for any more of this show because that's all the time we have. But on behalf of the Viceroy, a.k.a. Alex, and the Greasy Meatball, a.k.a. Mark Sebastian, and Uncle Mike Tusaw, and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on The Option Block.
Become a part of The Option Block. Just visit www.theoptionsinsider.com/forum to post a question for their hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.